How much are my dividends actually down? I thought it'd be a really good idea to compare my dividends from the first half of 2019 to the first half of 2020, just so we can get an idea of how much they've changed. Switching my portfolio over to be a dividend investor was one of the best decisions I made, and especially in a time like now. It's meant that I've had constant income coming in. I haven't had to worry about paying bills or rent or anything like that because it's all covered with the dividends that I'm receiving. It also means I don't have to worry about drops in stock prices because that doesn't affect my income. Now, as you know, I've been through stock market crashes before. This is my first pandemic-related economic crisis though, so it's a first for me, but it hasn't been that dissimilar to many other stock crashes. So all we're hearing in the news is how bad the economy is, that the stock prices are down, and yes, they are down, and how all investors are having a really tough time of it lately. So that's why I thought it would be a good idea to compare my dividends from last year to this year, just to see how true that actually is. So I will be talking about my personal investment portfolio so I can compare what dividends I received last year to this year. Now, I have a pretty good mix of sectors, and overall, all of the companies that I own are still paying, with the exception of banks. The banks have deferred their dividends, but all of the other companies that I own are still paying dividends. Some of them are lower than normal, but they're all still paying, except the banks. So I am in Australia, so I will also be talking about the Australian Stock Exchange and particularly my investment portfolio. That's made up of all Australian stocks. I don't own any overseas stocks. I used to invest overseas, but then I found that the tax implications just made things a little bit more complicated. You got tax credits, foreign tax credits and things like that, but it just made tax time all that much more complicated, and I like to keep things simple. So that's why I only invest in Australian companies now, just to keep things simple, especially come tax time. So even though we're comparing my portfolio from the first half of 2019 to the first half of 2020, it isn't going to be a completely fair comparison. During this time period, I have bought stocks, I have sold them. I did buy a lot when the stock prices went down recently, so I have bought a little bit since then, which means that my 2021 or possibly 2022 dividends are going to be great, which I can't wait for. But I thought it was still similar enough that comparing the 2019 to 2020 would still be a really good idea to see how much it's fallen, if it has fallen. So even though my portfolio is different from the two time periods, I think it's still close enough that it's going to give us a pretty good comparison. So let's jump into the computer and have a look at each of the months separately and see how different they are. So here are my dividends from 2019 and 2020 down to the last cent. This is taken from my actual budget, not my forecast budget. My forecast budget is just where I'm forecasting what I think I'm going to get based on the announcements that's been made or any expenses that I've got coming up. So I've taken this straight from my actual budget. So we're going to compare the first 6 months from 2019 to 2020. So let's look at January 1st. Not a lot of difference. It's slightly higher in 2020, possibly because I had a few extra shares, a few extra units of some of the stock that I own in January, but like there was no major issues in January. January is a quiet, a month that I don't get a lot of dividends in anyway, because I think only the exchange traded funds actually pay in January. February, again, not much was happening due to the pandemic, so pretty much what I expect. My dividends from 2019 to 2020, pretty similar, slightly higher in 2020 as you would expect because I had slightly more units of a few companies. Then we get to March. Now March is quite a significant difference, but I'll explain that in a minute because a lot of the companies that paid dividends in April actually paid in March, right at the end of March, which is why there was a much bigger payment at the end of March rather than April. But if we have a look, we can see that I got about 3,000 worth of dividends in 2019 and just over 7,000 worth of dividends in 2020. But a lot of that is a lot of the stocks companies that were paying in April. Now, in April 2019, I did get a special dividend, which is why that's significantly higher. I think it was, I can't remember if it was Wesfarmers, or one of them gave us a special dividend. It was around $3,000, which means that the payments here pretty similar again, but it did mean that because those payments were paid in March and not April, my dividends were significantly lower in April. Also, Bank of Queensland was one of the companies that was meant to be paying in April, but they've deferred their dividend, so I didn't get paid that in April of 2020. If we go over to May, again, pretty similar. It is lower in 2020. Westpac Bank had deferred their dividends. It's only the banks in my portfolio that have deferred their dividends. Everyone else is just paying, so it's just a little bit lower than I would have expected. Then we're going to June, and June is a bit of a more significant drop because none of the companies that I owned were actually deferring their dividend, but a lot of them were lower than normal. So I got just over 4,000 in 2019, but just over 3,500 in 2020. So none of the companies were deferring, and all of them were paying, just a lot of them were paying a smaller amount than normal. So if we have a look at the totals that I've got overall, in the first half of 2019, I got $24,745 in dividends. And in the same period for 2020, I got $19,925 in dividends, which is a difference of $4,819. If you do remember though, 3,000 of that was a special dividend. So probably we're looking at around $2,000 lower than normal. So maybe 10%, maybe 10-15% lower than normal of what I was expecting for dividends. As for the second half of 2020, I still think the dividends will be lower for the second half of 2020, but going into 2021, it's anybody's guess. It really depends on how long the pandemic's going to last, how long the companies are shutting down, and how long it takes before everything gets back to normal and companies are able to make money and profit and give dividends to investors again. So I think the second half of 2020 compared to 2019 will be a little bit more significant. I actually usually get more dividends in the second half of the year than the first half of the year anyway, like significantly more, especially towards the end of the year. October to December is usually when a lot of them are paying quite good dividends for me, for my portfolio. So it'll be interesting to see in the second half of 2020 how different it's going to be, and I probably will make a second video looking at the second half of the year or the whole year as a whole. Anyway, let's jump back to me so we can talk about what this means. So what can we learn from this? Well, I think the biggest takeaway is that companies in Australia are still paying dividends. But clearly that's not going to be the case in every country. There's a lot of countries where the governments or the companies have cut dividends to try and keep the money within the company so that they can hold out longer, and that's a perfectly reasonable thing for a company to do. But in Australia, at least, the majority of companies, or a lot of them at least, are still paying dividends. I'm actually going to be doing a video soon I'm going to actually go in and show you the companies that are still paying pretty good dividends, that still follow all of my criteria. So keep an eye out for that future video. I mean, I can't really say what companies are going to do in the future, but we can look at what they're doing right now. I actually prefer to focus on what is happening right now rather than any speculation, because people can have a educated guess of what's going to happen, but not all of those guesses or predictions are all going to come true. So I'd rather focus on what is actually happening right now. Who is paying dividends right now? So for me, nothing has changed. My investment strategy is still the same. I'm still so thankful and happy that I'm a dividend investor. Clearly, my method isn't going to work for everyone, and that's perfectly fine. People's financial goals, their risk tolerances, even the way they like to invest and enjoy investing is going to be different, and that's perfectly fine and normal. But this method works for me, and so that's why I thought I would share. Anyway, I hope you found this video useful and you found that the comparison between 2019 and 2020 kind of interesting. I found it interesting. Thanks so much for watching my channel, and I'll see you in the next video. Take care. Bye.